Hello and welcome to Market Domination Overtime. Stocks closing the trading day mixed. Our very own Inez Ferre has the headlines. Inez.
Yeah, Josh, and just taking a look at the three major averages, we're seeing the S&P 500 appearing to close just a hair above its last record high at 6,978. Then also taking a look at the NASDAQ Composite up 0.9%, and the Dow Industrial Average down 0.8%, weighed by United Health. I do want to point out the U.S. dollar because we have been seeing a decline in the U.S. dollar, and President Trump was asked about this afternoon at an event in Iowa. He didn't seem too concerned about the dollar's decline, and you can see that as he said those comments, it went even lower. He said that he could have it go up or down like a yo-yo. I'm just going to pull up a year-to-date chart here so you can see the decline in the dollar year-to-date, and if I just pull up a one-year chart, you can see the sort of action that we've seen with the dollar last year in the second half of the year, a bit of a consolidation, and started out the year with a decline. Taking a look at the sector action, we are seeing that today technology was leading, utilities as well, but make no mistake, as I mentioned, the S&P 500 at a record territory. Well, that's because also of the other sectors of the S&P 500 besides technology. You're looking at year-to-date energy, materials, staples, industrials, all leading the gains. Over on the NASDAQ 100, a bit of a lift for some of the Mag 7 as big tech will start reporting earnings tomorrow. Also, we'll get that Fed decision tomorrow. And then just taking a look at commodities, we have seen today with that decline of the dollar, commodities getting a lift, including crude oil and also gold, another all-time high for gold. Josh?
All right, Inez, thank you.
Thank you.
Well, gold continues its stunning rally. The precious metal holding above 5,000 for a second day, with some on Wall Street seeing gold hitting 6,000 this year. Joining me now is Ben McMillan, IDX Advisors Chief Investment Officer. Ben, it is great to see you. So precious metals continue to work, Ben. Let's just start on gold. Remarkable run. Just to remind viewers, Ben, so we break 4,000 in October. Then just over 100 days later, you smash 5,000. How do we make sense of this run, Ben? How do you explain it? And do we continue to move higher in 2026, Ben?
Yeah, so I think the short answer is we continue to move higher. And the reason is this is part of the debasement trade. I think last time we spoke around the summer last year, gold was somewhere in the 3,000 range, and we talked about exactly this. And the catalyst back then was the same catalyst now, which originally was central bank buying. And just as a reminder for everybody out there, up until COVID, central banks globally were buying about 500 tons a year of gold. Post-COVID, which is when, of course, the United States printed the majority of dollars in existence, after that massive monetary stimulus, central banks globally started buying about double that amount. That's 1,000 tons. That's huge buying. It's at a point now, and they've been selling treasuries, by the way, to fund that. Now, what we saw happen in 2025 was that trade moved into the broader investing landscape, the so-called debasement trade. And we heard about it just in the last session, market domination. Dollars dropping because, I think the number is at this point, 80% of all dollars in existence have been printed since COVID. And so, this is a structural tailwind behind gold. This is a fundamental repricing, and it's going to continue pushing higher this year.
Here's how my friend Peter Bukvar put it this morning, Ben. Peter, very smart guy. He framed it like this. He said the gold rally is not a safety trade. It is reflecting a tectonic shift in where global participants are most comfortable parking their money and preserving value. Also, in terms of physically protecting it in light of the continued freeze on Russia's central bank reserves. Do you agree with that framing, Ben?
100%. And I would actually underscore the last part of that because, this is something that was not well appreciated, more broadly, which was during the Russia-Ukraine conflict. The U.S. unilaterally seized Russian dollar-denominated assets, and setting aside whether or not that was the right choice or not, from a morality perspective, what that did signal to the rest of the world is, hey, your dollar assets aren't necessarily safe. And I remember even, there were allies talking. I think a minister of one of the Japanese bank, started expressing concern that, wait a second, if the U.S. can just take your dollars at any point, there has to be a safer play out there. And so, fast forward to today, and since then we've seen, gold get more of the geopolitical flight to safety bid, where historically that would have been the treasuries. So I think that absolutely hits the nail on the head, and it's no longer just the debasement trade. You're also getting the geopolitical flight to safety premium that up until recently was, the treasuries U.S. treasuries had been the dominant player.
Ben, let's say I came to you, though, and I said, listen, in my portfolio right now, I got stocks, I got bonds, I don't own gold. Should I buy gold here, Ben, at these levels, or no, you would say, listen, wait for a rest, wait for a breather, there's a better entry point coming?
So that is the question these days, because again, a lot of us were pounding the table on gold early last year. Nobody was, was interested. Now, of course, we're having these conversations with clients. The short answer is we would say don't wait. Gold should be a part of the 60-40 portfolio. Now, that said, structurally, how do you get into that trade? Dollar cost averaging historically is always a good way to do that. If it were silver, I might say, be a little bit more judicious about your entry. That's had much more of a parabolic run. There's some kind of technical factors there. I mean, we're seeing it today, in fact, with option expiration putting some pressure on silver. But I think the short answer is for gold, don't wait to get exposure. Again, this is a structural. This isn't a multi-year trade. This is a multi-decade trade. This is a repricing. So it's we think it belongs in every portfolio.
What about Ben? We're talking gold. How about digital gold? How about Bitcoin? See Bloomberg with a report today. So talking about how price is stalling, volumes are limp, they say. Believers are actually looking to equities and precious metals and prediction markets, they point out. What do you make of what we see with Bitcoin, Ben? What do you see ahead next 6-12 months?
So we're actually constructive on Bitcoin this year. It sat out much of 2025, which, to be frank, I think was actually good for it as an asset class. Ironically, you're seeing a lot of people, all the memes online talking about selling Bitcoin to get into the original, the OG Bitcoin, which is gold. But again, it is part of this debasement trade, and so we do see it going forward. I think we see a bid for Bitcoin. I think especially too as we kind of start chopping through, some other parts of the capital rotation, which we're seeing with Mag 7, we're seeing with precious metals, hard assets. It's very hard to see how Bitcoin is ignored in that. So I think technically speaking, I think it was good that 2025 was kind of a sidelines year. But I'd be surprised if we don't see Bitcoin. If it's not setting all-time highs this year, I'd be surprised if it doesn't get close.
Last question quickly, Ben. Is there a level you're watching with Bitcoin? I ask only because I've seen some folks, cited as saying, for example, they're watching 100,000. They're saying, listen, it's got to trade above 100,000 for the momentum in the bull market to continue.
Yeah, I mean, I think you start to get above, the technical thresholds matter. I think really above 90 is when you start kind of seeing the CTA buyers, the hedge fund buyers come back in. It's been very range bound. We look a lot at the blockchain activity. It's, there's a pretty good bid at 85, which is good to see. I think north of a sustained level north of 90. And then I think, again, like you said, north of 100 is when you start getting retail buying coming back in the marketplace. And that's what we think could be the catalyst to push it to all-time highs this year.
Ben, always great to see you and to have you on the show. Thank you.
Thanks, Josh.
Another metal we're watching, copper. It's been on a tear, even though price is edging lower on Tuesday. Yahoo Finance's Jake Conley joins us now with more. Jake.
Yeah, thanks, Josh. Copper, you've seen, like gold, like a few other of these precious metals. Copper's a base metal, but the same kind of crazy rally, right? Same time last year, it was trading below 9,000 per ton. Now, it just crossed $13,000 per ton. That's a huge jump. And I think it's really coming down to three factors, right? The first is this tariff policy uncertainty from the Trump administration. You saw last summer when Trump initially announced tariffs on copper, the market rushed to get copper over to the US, try to get ahead of that, created a lot of artificial tightness. Second thing here is a wave of supply disruptions on the macro side last year. The Grasberg mine in Indonesia, a few other huge sites that had major incidents. It's going to take some supply off the market. But the third kind of unknown variable right now that's really coursing upward is the demand from the AI and data center boom, right? Copper is a necessary metal here. You don't get these AI data centers without copper for wiring and all these other components. You put all that together, you get this huge race upward in prices. However, I'm starting to see some analysts say maybe this is a little overheated. Are we overstating some of this? But for now, copper's just been racing upward.
Before I let you go, what about nat gas? What are you seeing there?
Yeah, interesting picture. You've seen it trading down over the last couple of sessions as traders have taken profits from that huge jump we saw last week ahead of Winter Storm Fern. However, NOAA is coming out with some new predictions of a possible next round of storms coming this weekend. It's looking smaller right now, a little more contained to the far eastern seaboard as opposed to the entire storm of the entire country of this last storm, excuse me. But that said, if you do start to see severe weather predictions, you could easily see prices start to move back up as traders start to race back in and pipeline capacity retightens.
All right, Jake, thank you.
Thanks, Josh.
Coming up, tax season. It's back. We'll explain all the changes you can expect when you file your taxes in the coming weeks. That's next on Market Domination Overtime. Tax filing season is now upon us with age-old myths still puzzling American filers. There are several new tax rules, too, largely coming from President Trump's big, beautiful bill. Emma Ackerman joins me to unpack what you need to know before your taxes are due on April 15th. Emma, what do I need to know?
A lot. I mean, filing your taxes has never been accused of being easy, but like you said, with the passage of the One Big Beautiful Bill Act last year, there are a lot of new provisions to consider. So some of those can, save you some money down the line. One, you've got an increase to the standard deduction. We've also got a new deduction for folks over the age of 65, which is about $6,000, known as the senior deduction. We've got an increase to the state and local tax deduction for our itemized filers out there. So that's gone from $10,000 to $40,000. And you've probably heard the popular provisions known as no tax on tips and no tax on overtime. It's a little bit more complicated than the title suggests. It's more like...
It sounds so simple.
It sounds so simple, but you can deduct up to $25,000 of your tips from your taxable income. Of course, you still owe, Medicare taxes, Social Security taxes, state and local taxes. And then for overtime, it's up to $12,500 of overtime pay that you can deduct. And there's some other stuff in there too, increase in the child tax credit. And you can also deduct auto loan interest for made in America vehicles, so vehicles that had final assembly in the US. And there's others too that I'm probably not thinking of right now.
All right, so nothing's simple. Let me ask you this. What can we expect in terms of refunds this year?
So because of all of the provisions that I just mentioned, refunds are expected to be bigger, and that is probably good news for some people watching who may have been focused on the buzzword affordability in the past year. So where refunds have trended near $3,000 on average in recent years, this year we're looking at closer to $4,000. So a bit of extra cash in your pocket, whether that's to cover higher grocery bills or maybe tuck away into savings, which of course the folks that I spoke to always suggest.
Emma, great to see you. Thank you.
Great to talk.
Well, Benjamin Franklin said nothing is more certain than death and taxes. So getting to the bottom of tax truths and myths couldn't be more important. Joining me now to debunk it all, we got Tom O'Sabin. He is the Director of Tax Content at the National Association of Tax Professionals. Tom, it is great to see you. So let's get to some myth busting here, Tom. Start with a big one, a classic. Does filing early get you a bigger refund, Tom? True or misconception?
Misconception. There are lots of people out there that say when you file early, that's when the Treasury has plenty of money. Busted. No, there is no connection to filing early and getting a bigger refund.
How about this one, Tom? This one's going viral, you say. How about this one? Is it true that if I form an LLC, Tom, I automatically get tax write-offs?
Busted. Another one. Just forming an LLC, you might do that for your business, but you're going to have the same business deductions on whether you've got an LLC or a traditional sole proprietorship or a corporate entity. Filing an LLC is not going to get you some additional write-offs that you wouldn't have got anyway. So we're 2 for 2 in the busted category.
How about this one? Here's one I'm sure would interest some viewers. Can W-2 employees, Tom, Can they take a home office deduction if they work remotely?
Also busted, but busted after 2017. The Tax Cut and Jobs Act eliminated unreimbursed employee business expenses, and that's really where the bust came from. Prior to 2018, if you in fact work remotely from home, for example, you could in fact deduct a home office as an employee. In today's world, busted, that's only available for self-employed people. Point to take, if you're working from home and you've got expenses you incur, submit those expenses to your employer for reimbursement.
Here's one. This is interesting. Is it accurate, Tom, that if I don't get a 1099, my friend, the IRS doesn't know about the income?
I have to laugh at that one, and also busted. I've been at this for 35 years, and the number one thing that a taxpayer says is, I didn't get anything. So if I didn't get anything, I don't have any income to claim. Busted. The IRS is aware of the income, and in today's world, one of the reasons taxpayers may not have received anything is because they have actually elected electronic distribution for those items or electronic contact. Just because you didn't get something in the U.S. mail doesn't mean you don't have income. And just because you didn't get a tax document, the tax law says anything of value is in fact taxable. So no 1099, no tax, busted.
Tom, how common are audits? I ask because I bet a lot of people think, you know what, they're not common. They're rare, they're unusual. Is that true?
Absolutely it is. And I'll go off of my experience again. You have a likelihood of about 1 to 2% of American taxpayers are audited. And the numbers are even smaller if you are in fact a business. But the fact of the matter is, I guess it's sort of like being out there on the freeway, and if you see the state trooper, it'll cause you to slow down. The auditors are out there. They have algorithms that they use to test returns to see if that needs to be challenged, if it falls out of the realm of possibilities of what should be. So the auditors are there, but the likelihood of audit is still very, very small.
What about, Tom, no taxes on tips and overtime? I was just talking to my colleague Emma Ackerman about this, and she was saying, it maybe is not as simple as that headline suggests. What do viewers need to know?
You are absolutely correct. First of all, and including the forms that the IRS came out with, it says no tax on tips, no tax on overtime. But just as your previous guest said, that's not exactly correct. There is a deduction for tips. There is a deduction for overtime. But there are calculations that go into play. And as was mentioned previously, there's also income limits and also income phase-outs. So there can be a deduction for taxpayers, but it is not a circumstance where, hey, don't worry about your tips, don't worry about your overtime, it's all tax-free. It's more complicated than that.
What about the new rules for 2025, Tom? I don't know if you saw this. The Journal had a good write-up on here, and they talk about increased SALT deductions, new tax break for seniors, a lot going on here. I mean, is it possible, Tom, to say, in your opinion, okay, this is the most important change, or the 2 or 3 most important that you would put on people's radar?
I think we'd start with, and those are good questions, the SALT limitation, which stands for state and local tax. With that being increased from $10,000 to $40,000, and we've been at $10,000 since the Tax Cut and Jobs Act came out in 2018, many people were not able to itemize deductions. With that increase to $40,000, I think there's going to be some impact for people, especially in high tax states. I'm coming to you from the state of Illinois. We have high property taxes. More people, I believe, are going to qualify to itemize. I think that's going to be an important takeaway too. And you also mentioned about the senior deduction. One of the myths out there, you hear it almost every day, is that the new One Big Beautiful Bill Act made Social Security benefits non-taxable. Not true. What they have brought actually is a senior deduction. You just have to be age 65. If you're age 65, there's a $6,000 deduction. It's a separate deduction. It's not part of the standard deduction, not part of itemized deductions. If you have a married couple filing jointly who are both at least age 65 at the end of the year, each one has a $6,000 deduction. But like other things, there is an income phase out.
Finally, Tom, listen, you've been doing this a long time, as you noted. For this tax season, Tom, is there any kind of just common big mistake or mistakes over the course of your career you've seen people make that you would say, listen, don't do this, avoid this?
I would say, I'll talk about from taxpayers in general, as opposed to those who come to a professional. If you're going to do your taxes yourself, which you can, I would say use software. Use software because it's going to eliminate those errors that you're just describing that people have made for many, many years. Math errors, putting the wrong social security numbers on returns, forgetting to include income. Use some software and also use direct deposit. It'll take some of those simple errors and the human error part out of it, and you'll get a better experience in filing your return.
Tom, great to have you on the show today. Great advice. We appreciate it.
Great to be here.
Time now for what to watch Wednesday, January 28th. It is the busiest day of the week, driven by tech earnings. 3 of the Magnificent 7 companies are reporting after the markets close. We're going to hear from Microsoft, Meta, and Tesla. At Microsoft, the focus is cloud capacity and whether AI demand is being constrained by data center bottlenecks. Meta investors will be watching CapEx closely as spending tied to AI infrastructure continues to rise faster than its peers, potentially pressuring margins. And for Tesla, analysts are watching data around deliveries, pricing, and progress on autonomy and AI. This coming after CEO Elon Musk said early production for the Cybercab and Optimus will be agonizingly slow. But before the earnings fireworks, we're going to be getting the Federal Reserve's interest rate decision. Markets are widely expecting the central bank to hold rates steady. But looking at the political backdrop, there's fierce pressure from President Trump and a looming announcement of the president's pick for the next Fed chair. The betting market showing a late swing toward BlackRock's Rick Reeder. According to Polymarket, his odds now nearing 50%. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after closing bell. But don't go anywhere. On the other side of the break, it's asking for a trend, and I've got you covered for the next half hour with the latest and greatest market-moving stories. Stay tuned.